Welcome to Foreign Currencies with Scott. I'm your host, Scott. So today, like yesterday, we're going to look at a live Forex chart. Yesterday we looked at the US dollar Japanese yen chart. Today we're looking at the Great British Pound US dollar chart, which you can see indicated in the upper left-hand side of your screen. So the current value of this currency pair, if I scroll up a little bit, you can see in the lower right, the white block, 1.25273. That is the current value of the pair. It means that about $1.25 is required to get us 1 British pound. Remember, the first currency listed in a pair means one of the unit, and then how many units it takes of the second currency to make that 1 unit of the first. So $1.25 equals 1 pound. So today what we're going to look at is the sell and buy prices in the upper right-hand corner. You can see that those two numbers are moving as well. That's consistent with the fact that we're looking at a live market and that white block number is moving all the time. Now, what those mean are what we spoke about the other day with Apple stock. If you think it's going to go up, you buy it. If you think it's going to go down, you sell it. But how do you sell it if you don't own it? We don't worry about that with currency trading. With currency trading, we are always looking at a pair. And so we're just determining, do we believe that the pair is going to go down or the pair is going to go up? So if we think that the US dollar is going to get stronger, that means it would require less US dollars to buy 1 British pound, which means the value of the pair would go down. So if we believe in a strong dollar here in the near future, we would want to sell this pair. So again, those terms sell and buy are still used here like the stock market, and it still means going down, but it means this particular pair is going down. So you always need to keep that in mind before you enter any position or trade. Okay, so the sell and buy, what you may have noticed is that there is a difference between the two numbers. Now the difference will, at this moment in time, almost always be 16 units. Okay, that is because it's you're given a lower price to sell and a higher price to buy. That difference is called a spread, and that spread is how a broker makes their money. So 16 units in this is actually a very reasonable price. This is a good broker. I've been with them for a number of years, and they almost always honor that 16 unit difference. Now, these units have names, and you will notice that for most currency pairs, there's usually a 6-digit number. Sometimes the decimal point is in a different place, but it's usually 6 digits. So here we have one number, a decimal point, and then 5 numbers. With the USD JPY from yesterday, remember it's over 150, but it's still 6 digits because it's 150 point something, something, something. So the 5th digit is called a pip. So we talk about when we want movement or when we see movement, you will hear on the news or you will see that this pair moved 40 pips or 100 pips. So in this case, 40 pips would mean, if you look at the blocky number right now, the 4th and 5th digits are 24. If it moved up 40 pips, that means it would be 64. The last digit is a 10th of a pip, or what is referred to as a pipette. So that 16 units I talked about as the spread that the broker gets, it's essentially 1.6 pips is the difference, and their commission, if you will, from each trade. Okay, so we've covered, again, a lot today in a very short time, but hopefully these are just a couple of concepts you can take away with you today, and we'll look at more tomorrow. I'm Scott, and this is Foreign Currencies with Scott.